All right, guys. Thank you for joining us. This is the March 25th, 2026 Theta Alpha Fund update with myself and Danielle Nadeem. We're going to talk about what's going on in the fund, what additions there have been, why, how it's changing, and what we see looking out into the future. So, yes, Danielle, let's begin here.
Yeah, so the topic of our fund call today is why we included Micron Technology and KLA Corp in the fund. And after that, we are going to also talk about the summary of outstanding positions and what's happening with the fund and also what to look out for in the next few weeks. So I'll begin.
Before we start here, why did we want to add two more positions? Tell us.
Yeah, so the reason for adding two more positions is basically these hyperscalers, because they have announced this CapEx at the start of this year. So it's going to take some time for the stock prices of these hyperscalers to go back up again. And in the meanwhile, we needed some catalysts in our fund to perform well. So that is why we needed some companies. And right now, what I observed, and the reason that I included these two companies is because memory sector or memory chip sector or anything that has to do with memory are at the is at the forefront of growth at the moment. So if you see any stock doing well in the Nasdaq, it has to do something with the memory sector. Like most of the stocks have to do something with the memory sector, and these two companies are also related directly or indirectly to the memory sector. There are other companies also, but we picked these because we thought these are the best representatives in the Nasdaq of the memory sector. Okay.
Yeah, let's continue on, Danielle.
Yeah, okay. So the first company that was chosen was Micron Technology, and we basically included it in our portfolio at the end of January or start of February. I'll just describe briefly what Micron Technology basically does, because I think everyone has an idea, but in order to re-emphasize and just refresh everyone's memory, Technology basically manufactures advanced computer memory and data storage solutions. So its core business is divided into two critical memory technologies. One's dynamic random access memory, that's called DRAM. The other one's NAND flash memory, NAND. Okay. So DRAM is a volatile memory essential for computer, servers, and mobile devices, while NAND is basically in simple layman terms, NAND is these flash drives that you have. Okay. So they have some utility, but mostly it's DRAM memory that is used, and that is inside of all our PCs and other stuff. So basically every electronic device that we use that needs DRAM memory. So DRAM products are semiconductor devices that provide low latency. So low latency means the speed of retrieval of data from a source, okay, from a memory source. How speedily can you retrieve data from that source? So the lower the latency, the better that product would be. Okay, and enable high speed data retrieval with a range of performance characteristics. So right now, Micron is at the forefront of technological transformation driven primarily by the growing demand for AI infrastructure. So what's happening is initially when this AI thing burst onto the scene at the end of 2022 and at the beginning of 23, what everyone it came out of nowhere first. So all of these hyperscalers, they started buying compute power. Okay, they started buying compute power, and what companies are the forefront of those compute powers? Those companies are Nvidia, AMD, Intel, and they basically design these GPUs, and these GPUs are the chips that are used in these GPUs are manufactured by TSM. So we got to know of these companies, and these companies were at the forefront. But at the back end, memory chips were also needed. Initially, these companies were procuring these memory chips from two South Korean companies. Those were SK Hynix and Samsung, and Micron Technology was making these memory chips, but they were not basically manufacturing high bandwidth memory chips. Okay, so for a GPU, these advanced GPUs that are being manufactured by NVIDIA, AMD, they need AI memory chips. Okay, so memory when Micron also started developing it, like garnered some sort of attention, and by 2024 NVIDIA started giving orders to Micron in order to procure these memory chips, and that is when it started getting a lot of attention. And since then Micron's stock price, which I'll show you in the later slides, has like drastically gone up. So Micron's high bandwidth memory chips are foundational to AI data centers and critical for major GPU manufacturers. As a result, Micron is one of the world's largest semiconductor companies and a dominant force. So like alongside there are two other companies, and those are South Korean companies. So basically it's a three horse race. Okay. Now what's like how do you like Okay, now like what's different with the Micron technology? I'll get to this. So the major important part as compared to like those compute chip manufacturers like NVIDIA and AMD, the one big difference is Micron basically manufactures its own chips. It does not ask TSMC to build its chips. So Micron does it on its own. So there's less sort of geopolitical and there's less logistical risk. But on the other side, there's like more cost of goods sold type of cost that is associated with their business. Okay, and in recent years, Micron has also taken advantage of the CHIPS Act. It's gonna develop $100 billion fabrication facility in New York, and it's also gonna build a $15 billion facility in Idaho. Now, like, why is Micron's like why did we not select Samsung or SK Hynix, and why did we select Micron? So one of the reasons is Micron is a US based company, so like the revenues and whatever they like generate, that does not have or that does not get converted into any other currency. So if we had chosen a company like Samsung or SK Hynix, because they're in the same business. One of the problems that we would have encountered is that there's a currency translation risk. So whatever revenue they would be earning would be in South Korean, whatever the currency is. But like when we would be converting it back to USD, the problem is that there would be a currency risk first. The other thing is there's also a strategic importance to Micron. Micron being a US based company, it's gonna be preferred by like the likes of Nvidia and AMD because they are also like basically in the US. They operate in the US. So now there's a strategic importance, and with this current US administration, this strategic importance is even more prominent, or it holds even more prominence because like right, this administration basically promotes companies that are domestic, like, and by domestic, I mean like the US based companies. So like that's why there's a strategic importance to companies like Micron, and there's like also some sort of strategic importance to companies like Intel. Beyond AI, its products are vital for cloud computing, mobile technology, the automotive industry, and a wide range of industrial and consumer electronics, underpinning critical digital infrastructures such as IoT, Internet of Things, and 5G. So it's very important. It's used in 5G, it's used in cloud computing, it's used in mobile technology, it's used in the automotive industry. So think of any think of the likes of Tesla when they are going to come up with their self-driving vehicles, they would need these memory chips because like memory is gonna get stored. Whatever roads they are driving on, it's gonna obviously store memory, and these memory chips will be crucial. And it's important with any other thing like 5G technology or any other technology. And the more complex technology gets, the more these AI chips would be important because AI has become so pervasive. So Micron serves a diverse global customer base. So like what customers do they have? The first is hyperscale cloud providers and AI companies. So these are becoming dominant customers. Major clients include NVIDIA and AMD. So like, yeah, these are compute GPU manufacturers basically. And other key customers include tech giants such as Alphabet, AWS, and Microsoft Azure. So what these companies do, obviously these have data centers. And although they might not need like AI chips like what NVIDIA and AMD need in their GPUs, but they would need these DRAM storage chips for their normal data centers. So like it's important to everyone right now, these memory chips. OEM manufacturers. So who are these OEM manufacturers? Any company like IBM, Intel, HP, any company that is building these PCs that we use. So obviously every PC has a DRAM memory attached to it. So these companies also need these OEMs also need these memory chips. Enterprises, so utilizing Micron's products for data centers and broader computing infrastructure. So, and what are these enterprises? These enterprises are big data centers that do nothing, that only have big data centers, and they would like just rent out their data centers to different companies for use. So these also need memory chips. Continuing on, Micron Technology is currently experiencing a period of intense focus due to several converging factors. So, like one is the AI memory supercycle, as I alluded to earlier. What's important to note here is that Micron's HBM production over 2025 was sold out, and it is showing visible and strong demand extending into 2026. So like there's strong demand for this. So right now we are in 2026 and there's a huge memory chip demand cycle going on. And that's why like that was one of the reasons for including this company in the portfolio. The other thing is Micron itself is going through a strategic portfolio transformation. So what it is doing is previously it also used to cater to the consumer segment, and consumer is basically these OEM manufacturers. But now it's like gonna deal with that very less, and it's gonna more focus on these AI companies basically. Like whoever wants to deal with AI, that would deal with Micron more because Micron sees more revenue and more potential for growth in the AI category as compared to any other category that it was dealing with before. The last important thing is supply demand imbalance. So right now uh, there's a supply restriction. So supply is very tight, whereas there's huge demand. So this is like the demand far outpaces supply. And the imbalance is partly driven by capacity shift toward higher margin server and HBM products at the expense of commodity DRAM and NAND production. So right now, like they're not dealing this as a commodity. They want this for their AI products, and that's why there's a big supply and demand imbalance going on. Like as I wanted to show like how the stock has done in the past few years. So by the end of 2023 it started to gain some attention, and although like the later part of 2024 was not that great, in 2025 when it started getting ordered at the later end of 2024, but by 2025 when like it came to everyone's attention, look at the stock price increase. The stock price, Micron's stock price saw an approximate gain of 240%, and that led the semiconductor sector. And this is like due to this AI super cycle. Basically, when NVIDIA, like the news came out that NVIDIA is buying huge quantities of memory chips from Micron too now, apart from SK Hynix and Samsung, that's when like the stock took off. And even this year, it's like, although like February was not that remarkable, March is also like flattish. By in January alone, January alone took the stock price gains to 48%. So yeah, throughout 2025, the company consistently delivered robust earnings reports, and it surpassed analyst expectations. So if I show you this, if you see the total revenue quarterly, so the total revenue has been growing by here it was a ladder, but now like it's a very big ladder. If you see the revenue line, revenue bar here, so it's a very big ladder. And ironically, when it delivered these earnings, after that, the stock price like may have come down, and that's because of other reasons, but which I'll touch upon very briefly. But like the ladder is becoming bigger and bigger, so the revenue is growing. So this shows like how much demand and how tight supply is right now. And the earnings or net income, you can see this blue bar. The net income is also growing, and it's growing like consistently. But like this growth is exponential, is what I would say. This last quarter growth that we saw is exponential. Now, to touch upon, before moving on to KLA Corporation, people might have this question that like why is Micron Technology stock price falling? So one of the reasons is like after it was like buy the rumor, sell the news kind of stuff, and today the stock price fell because like Micron um like went to capital markets and it wanted some to like issue some debt for its expansion and other projects. So whenever that sort of thing happens, there's the sentiment, okay, so the debt would come into equation, there would be more interest and the earnings might get impacted. So there are fears around that. But like it's not that big of a deal right now. Every company is like procuring debt because debt is the cheapest form of capital that you can get, and like it's pretty normal for companies to like go and get debt. So it's some sort of reaction, but you could see the stock price like going down before going up again. But like the potential for the stock price to go back up again is very high, in my opinion, at least. Okay, so moving on to KLA Corporation. So KLA was formed as a KLA 10 Core Corporation. Was like it was a merger between KLA Instrument Corporation and 10 Core Instruments, and these were formed basically in 75 and 76. But this merger happened in April of 1997. So what KLA does is it develops advanced process control and process enabling solutions for the manufacturing of wafers. So basically, in simple terms, I've like mentioned it here. KLA provides machines that inspect and measure semiconductor chips, software that analyzes manufacturing defects and performance issues, service that maintain, optimize, and support these systems. So basically, whenever a chip is being manufactured, KLA has those machines that like test whether the chips are like in usage and those have been manufactured properly and there are no defects. So the chips are getting smaller and smaller, these machines are needed more and more because like you have to check like the more complex the chips and the more complex a smaller a chip is, the more these machines are needed in order to verify like there's no defect in these chips. So that's why these chips are in huge demand. Like what are the long-term demand drivers? So once adoption of EUV, extreme ultraviolet lithography. So what this means is like previously, I don't know how chips were manufactured, but now it uses this EUV technology. And because of this EUV technology, chips are very complex and very small. So in order to check for defect, you need these machines. And like that's why like the more complex, as I said, the more complex and the more smaller the chips get, the more there is need for these machines. There's growth in advanced packaging, so rising complexity and value of semiconductor packaging, especially for AI and high performance computing, is driving significant growth in KLA's advanced packaging business. So, like advanced packaging, KLA also does advanced packaging. So, and when the chips are like put on these wafers, like these are these like silicon wafers, and these wires are put on these silicon wafers, it also needs to be packaged because there's some sort of switch or there's some sort of plastic in which it is packaged. So KLA's machines also does that manufacturing. So that's why KLA's manufacturing advanced packaging machines are also needed. Broad-based digital transformation. So like because like the technology is advancing so fast, more and more advanced chips are needed. And like they basically, if I were to sum it down, the basic need for these chips, these machines is because these chips are becoming more advanced, and the more advanced the chips are, the more machines are needed in order to verify and like check for their complexity and for their like usage. So KLA's business is also closely tied to capital expenditures for semiconductor and electronics manufacturers. So like the more capital expenditures any semiconductor manufacturing company or I mean any hyperscaler does, basically they are procuring more chips, and obviously if they're procuring more chips, they will need to verify like whether these chips are like right or not. Okay. So, apart from that, one other point that I wanted to mention is accelerating. Like right now, they're like doing this CapEx. But apart from CapEx, where AI comes into play is like even after CapEx is done, they would like these companies would fight or like compete with one another on efficiency. Okay. So like who like which chips are more like whenever you spend like $100 billion, for example, on chips, and I'm just giving hypothetical numbers, like what percentage of those of that investment turn out to be efficient. So the more efficient the chips are, the more like the more benefit that company would get. So in order to accelerate yields, they would need these machines in order to like check and verify that they have made the correct investment. Yeah, so like the company did really well in 2025. It saw a gain of 94%. And over the last 12 months, from this point year to date, it has seen a gain of 106%. In this year, in the first 2 months, the company also did well. March has been a slow month for KLA, and we can like this like you also have to put into perspective like whatever is happening on the geopolitical front. So like yeah, so like it's not only the stock that has to fight to go up again up. There are other factors that also play a part in whatever is happening to the stock. But like overall, the company has also delivered robust earnings. If you see here, there's like the company's revenue is growing um, consistently. So you see like there's a this bar revenue bar is going up, the earnings are also increasing. So that's why like we also included KLA. Matthew, do you want to like, so I'm done with both companies. Like if anyone has any questions, they can like tell me, but like I want to go over like what's happening with the S&P and the Nasdaq right now, or do you want to cover this?
No, so yeah, so we added these two companies because we saw some kind of changes going on in the technology markets here, and we decided to add this to our AI stack. I think they make uh, good and reasonable additions to our Magnificent Seven kind of stock selection. And this gives us more opportunity to outperform the market as well, right? So, we are pretty dynamic in assessing what stocks to add and subtract to the portfolio, and we're quite pleased with this selection. Now, as wonderful as everything that Daniel said about those two stocks, Daniel, looking at this chart next, it doesn't really look like the stock market cares about how wonderful those stocks are, does it?
Yeah, so
Uh,
like one thing,
um,
it speaks volume about the performance of the two companies. Like we are seeing in 2020, 2026, these companies have like the stock prices of these companies have grown over stock price of these companies have grown over like 20 to 25%. And if you see this chart from like start of January, all this Nasdaq or the S&P has done is go down, right? And the what's alarming right now, it's crossed its 200-day moving average going down, and that's pretty alarming because it signals a bear trend. But here's the catch. The stock market is not going down based on fundamentals, it's going down based on geopolitical events. So whenever this 200-day moving average is broken, like from above, it does signal a bear trend. But the thing is, like if it's broken because of geopolitical issues, this bear trend might not last that long. So there's an exception to the rule, and I always take this with a grain of salt that like whenever like a big moving average or a big support or resistance is broken, but it's due to events that are not fundamental, and these are like geopolitical, which no one has control over. These things can always reverse, and this is like in my opinion, what my belief is. This like if this deal goes through, like which is like what we are hearing in the news, you could see this 200-day moving average being broken again on the way upwards.
Yeah, and listen, this is we had a very healthy 2025, and we seem to be in the same slump almost 1 year later. April is not there, but you can certainly see the tail end or the part in May at the very bottom left of the screen, and look at how low that index level was there, right? And now we see this as being discernibly higher, right? Even despite the downturn. So I'm quite pleased with that. I'm quite pleased with the stock selection. Obviously, not pleased with the market so far this year, but I do think there's a sense of sequel to last year's movie type of thing coming out here. And by that I mean, you have a big sell-off for whatever reason in the first part of the year. Last year, that reason was tariffs. This year, it is an Iran war. And of course, we don't see people dying, but that is the cause of this downturn. Iran war, creates uncertainty in the market. We see oil prices increase. We see, and then we're thinking, okay, well, will inflation be going up? And you know, how is the Bank of Canada and the Federal Reserve, more importantly, going to tackle that? And that causes uncertainty and it ripples through the market and ripples through several different markets. And, here we are, right? Uh, it's not really more complicated than that, although that does seem a little bit verbose. That is what has happened here, right? Now, technically speaking, I wouldn't be surprised. Like we have support around where that area is, but it seems to be, very faintly breaking that. And the next area is down at that like kind of 6360 line, right? So we do have a good chunk down to go if needs be. But that's what this chart is telling me. So, if you ask me, well, when will this happen? It's like we don't know when this will happen, but I think over the next 4 to 6 weeks, we'll see this kind of downturn start to let up a bit. What do you think, Danielle?
No, I agree with you 100%. But like, if this deal happens, like whatever we are hearing in the news, like I won't be surprised. Like, we're just not going to test any support level. It's going to rather go back up again very quickly. So it really depends on like what happens on the geopolitical front, which like nobody has control over, basically.
Yeah. Okay, let's move on here.
Yeah, so like it's a similar pattern here with the Nasdaq. So like it's broken its 200-day moving average, same thing. It has supports, but like yeah, it really depends on like what happens on the geopolitical front. So like if the things go well, which I we hope like we it's not like normally I just wanted to tell like well, if you see this line like I don't know if everyone is seeing my cursor, but like whenever this 200-day moving average here, like when it got broken, you see how far up the stock market went. But like it's the
Mm,
same rule here, like if it gets broken on like on going down, like you could see a bear trend. But right now like there's also like a caveat attached to it, and it's a big one. The caveat is that like what circumstances or fundamentals led to the the breakage of this 200-day moving average. So this one, it's because of geopolitical. So in geopolitical events, like it can lead to extraordinary things. So like that's why I take it with a pinch of salt and a grain of salt. But like that's why I don't take it that seriously. But like if it was broken due to fundamental reasons, and fundamental reasons being like, okay, the economy is not great. Okay, we are heading into stagflation, or like inflation is too high. Fed might go for rate hikes. Things like those, yeah, so that's like a bear trend. That's a real bear trend. This one, it's because of geopolitical. The market may not be like paying attention to like whatever is happening like, on the technical front, like which moving average got broken. It's basically like right now it's reacting to whatever is happening on the geopolitical front, and it's basically like treasury yields going up, oil price going up, and like yeah, people going into commodities and into treasuries because like they like fear the oil price might go up of $100, and that will lead to higher inflation and stuff like that.
Yeah.
Okay.
So I think it's uh, what Daniel said is absolutely accurate there. I think this is more of a wait and see type of time here. That being said, we are writing a lot of covered calls on the portfolio these days. With heightened volatility, we can seem to transact pretty easily there and lucratively. So, and we're actually doing quite well on that front, and very pleased with the performance there. In terms of the fund, you see here, uh, Alphabet, Amazon, all around their targets, like pretty much the entire portfolio is in and around their targets. Nvidia a little higher. That's usually I think that's primarily due to outperformance there. Uh, but generally speaking, we're all around their targets. You see the inclusion of Micron and KLA Corporation there. And Micron is already over its target, and the reason it's over its target is because it's performed pretty well lately, right? That's really the reason why, right? But we're very comfortable with these positions here. Again, 15 positions. We're not looking to add too many more because then we get into a level of breadth which we're simply not all that comfortable with. We would want to stay within a very tangible and mindful set of securities while maintaining some level of diversification. Daniel, next page, please.
Yeah.
So yeah, so we don't have any puts outstanding, but we do have a whole bunch of calls. We have some cash, and right now you do see that the Theta Alpha Fund it is trailing a little bit. But that trail, guys, that trail is pretty much entirely in January and February. In fact, in March, we are beating the index. So that is turning around now, and we're quite happy about that. And yeah, but in my opinion, this is a sequel to what has happened last year.
Yeah, I would like to add two more
Last year,
points here.
sure.
Yeah, one point is like I just wanted to reiterate what Matthew said. Like it's a sequel to what happened last year. Last year we were in a similar position in the first 2 3 months. This is basically due to like it's not due to like basically January was also like a bit like very we were neck to neck with the benchmark. It's basically in February, and that is because like when the earnings of Meta and Microsoft came out. And like although the earnings were positive, but they announced big capital expenditures and the stock prices fell of those two companies, and we hold a higher allocation as compared to the benchmark, and those prices fell, and that led to the outperformance of the benchmark versus the fund only in February. Basically, February is the only like rotten or bad month for us. Like this month we are leading the index, but that led to this gap. And we'll like obviously it's a sequel to what Matthew said. It's a sequel to this. We were in a similar position last year, but we like what we did, everyone, it's in front of everyone. And like as soon as these hyperscalers and companies like go up, we'll be seeing our performance like match up to whatever the Nasdaq does.
Yeah. Let's go to the next page, please. So yeah, so we have, yeah, obviously it's registered fund is 2.5. We have our fund sort of code. It is a high growth uh fund. And yeah, for accredited investors, portfolio managers, SMA accounts. And yeah, so if you have any questions about the fund, continue on, Daniel. So, what to look out for next. So, as Daniel says there, week February played out, March tends to do better. We are experiencing that right now. We've positioned ourselves accordingly. And quite frankly, when the market does well, we do even better. And then the market does not so well, we do a little bit worse, right? That's generally how it looks. And the market hasn't done very well, so we're doing a little bit worse, but you know what? I think the year is still very young, and as time ticks on, the portfolio will get back to will get back and be competitive with the index once the geopolitical risk is kind of silenced, or at least muted to that matter to that fact. Now the issue is here. The main thing to look out for, I would say, is two-pronged. One is the obvious geopolitical risk. That's number one. And number two is the actions of the Fed. And unfortunately, the actions of the Fed are now tied to the geopolitical risk. So you want to consider this like just one issue. You want to consider this like 1A and 1B. Well, you could consider both those ways, but they are both very tied to each other. What's really important, and I think the focus should be, is on the fundamentals of the businesses that we are invested in. And those fundamentals have not changed, and they have not really slowed down either. We've had one earnings season uh, under our belt now, and in about a month's time is going to be into another earnings season, and we don't expect to see material declines in earnings from the companies that we are invested in. And at the end of the day, that is what is going to drive this portfolio and others, of course, to the next higher level, right? So for now, we are going to be, and the interesting thing about geopolitical risk is um, you can't really do much about it, right? You can't really do much about it, especially if you're in a growth index. You could say, okay, well, let's swap out to ARMs. Let's go get dividend paying stocks. Let's have a flight to safety. Yes, yes, you can do those things. I prefer the approach to say, okay, well, the portfolio that we have, let's make more beneficial trades and let's make the most out of that situation, right? I think that is better off because otherwise we are swapping markets, and that's simply not the strategy that we are doing here. So yeah, now is the time to, this is a perfect time for some more covered calls, some tactical naked put selling, and that's exactly what we've been doing, and been doing it fairly well recently as well. Daniel, anything else to add here?
Yeah, I just wanted to say like whatever Matthew, I agree upon like whatever Matthew said, and April historically has been pretty strong. Yeah, but like this geopolitical is kind of a headwind. Like if it clears, like we see a couple of stronger months coming up, so we'll position accordingly. And one other thing I like forgot, but like I wanted to mention one other thing is like yeah, one thing you said, as you said, like whenever the market goes up we do well, and then when the market goes down we do a little bit less than that. But like the thing is it's a little bit less, but we sometimes do better than the market even then, and that's because like we basically have picked up winners in the Nasdaq. So like when you pick up winners and you have a better allocation to winners, basically you tend to do well.
Yeah. So, we believe that we picked, stocks that are going to outperform the index, and that's exactly what we're waiting on. So, this is the approach which we've done for many years, and in a fun format now, 3 years in, and we'll continue to do that. What's next, Danielle?
Yeah, it's like what to look out for. Like March has been one of the stronger months. April also, if you see the return percentage return, it's been 1.9%, which is pretty high. Gain frequency is 80%. Max return was 12.7% in 2020. So that was an anomaly. Like it was due to COVID and like when the market shut down and then like when it was monetary easing, basically everything started to go up. The minimum return of minus 8.8% in 22 was also an anomaly. It was like when inflation went up high, the Russia-Ukraine war basically started. So that was also an anomaly. But right now, like if the geopolitical situation resolves, we are in a pretty normal market. Like fundamentally, there are challenges, but like if the geopolitical situation resolves, it won't be an anomaly. We can talk about geopolitical situations, but without that, like yeah, we will be seeing a pretty stable market because like the Fed was like I like to think the Fed, like Donald Trump, basically the US government is making the Fed work for every penny they earn right now. Like since he's
Yeah,
been public.
every penny, yes.
Every penny they earn, like they are being made to work for that. So like since last year, they were on course to like control inflation, and then he brought on those tariffs, and they like literally tried to get a hold of the situation. And as soon as they got a hold of that situation, he's gotten into this war, and the oil prices have started going up, and they have to like go back to the drawing board again and like do something about it. So yeah. That remains to be seen what happens. We can talk about that, but right, yeah, but overall, seasonally, April is also a very strong month.
Yeah, and does seasonality really come into effect this year? Maybe, maybe not. I think there's overriding um, economic and geopolitical issues that are going to um, take precedent here. So you may see a little bit of that, and because we've had a lackluster Jan, Feb, and maybe even March on a nominal kind of index level basis, I would not be surprised if we see um, a rally into the summer after this geopolitical tension has subsided, assuming it does by then, right?
Yeah.
Okay, Daniel, next please.
Yeah, so like, yeah, we're
So
almost
yeah,
done.
if you have any questions about the fund, guys, contact myself, or David Jarvis or Nadeem, or Danielle Nadeem. We are all portfolio managers on the fund. Happy to help you out. And thank you for your time, and thank you for your support and allowing us to do such a wonderful thing. Uh, okay, next, please. We do need to put on the obligatory disclaimer, I believe, which is next. Yes, we leave this here for a few seconds. Thank you very much, guys, and we will talk to you soon.
Thank
Bye.
you. Bye.